You've probably heard stories of buyers backing out at the last minute or sellers pulling listings. The big question is why? Based on Redfin's latest data, real estate contracts are breaking at the highest rate since before the pandemic across the country, and both buyers and sellers are feeling it. Today, let's unpack what the latest data is telling us and the reality behind these cancellations. First being buyer-seller disconnect. Right now, the biggest story in the housing market is a motivation gap. Buyers are frustrated because homes just aren't affordable, and sellers are still holding out for the high prices we saw during the pandemic. Even though some sellers have lowered their prices a bit, mortgage rates in the mid 6% range make monthly payments feel heavy. At the same time, many sellers don't want to budge because moving means giving up their 3% mortgage rate. That tension shows up in rising cancellation rates, and it's why even small roadblocks like a repair request after an inspection or a minor closing delay can now kill a deal. If you're buying, get pre-approved early and keep your payment estimates up to date because rates and taxes shift quickly. If you're selling, stay open to adjusting your price or helping with closing costs to keep serious buyers at the table. Sometimes a little give and take can save your deal. The second point is fewer bidding wars and more price cuts. For most of 21 and 22, sellers called the shots, but that's changed. The sale to list price ratio, which shows how close homes are selling to their asking price, has been falling. This means homes are selling below asking, showing that buyers are starting to get more leverage. Without bidding wars or backup offers, sellers can't just hold out for the premium price anymore. That shift gives serious buyers more room to negotiate, but it also means deals are taking longer to close. So if you're buying, don't feel pressured to move fast. You may not have competition this time. So take your time, make a thoughtful offer, and ask for credits, whether for repairs, closing costs, or other concessions. And if you're selling, review your market comps weekly. If showings are slow, it's better to adjust your price sooner. A small price correction could save you weeks of just sitting on the market. And the third point is seasonality and consumer behavior. Fall always brings a natural slowdown in the housing market. Back to school routines, holidays, and travel plans, fewer people are focused on buying or selling homes. But this year, the slowdown feels even more noticeable. Even though mortgage rates have dipped slightly, it hasn't sparked a buyer rush. Instead, it's brought more sellers to the market. If listings continue to outpace buyer demand, we could see prices level off or soften modestly heading into winter. That's good news for long-term balance, but frustrating for anyone expecting a quick sale. Fourth point would be the regional divide. Lastly, not all markets are moving in sync. Take the Midwest, for example. It's showing surprising price strength. Thanks to local job growth and homes that are still relatively affordable, you can still buy a home in cities like Cleveland or Detroit on a median income, which keeps demand steady. Meanwhile, Texas and Florida, where many new homes were built recently, are starting to feel the effects of oversupply. Prices are cooling there, especially in condos and newer subdivisions. While here locally in Madison, we are still seeing days on market holding steady at less than 30 days and median home prices remaining strong around $400,000. So we're not seeing the big shifts here locally that you might be seeing in other parts of the country. This regional split shows that 2025 isn't a one-size-fits-all market. Success depends heavily on where you are and how your local inventory looks. So whether you're buying or selling, follow your local data instead of national headlines. The best strategy depends on what's happening in your zip code, not nationwide. What's happening right now isn't a housing crash, it's a reset. Deals are falling through, not because the market is broken, but because it's rebalancing after years of runaway demand and unrealistic expectations. Buyers now have more say, sellers are adjusting, and both sides are learning to navigate a more normal market again. That's a healthy shift, even if it feels messy at the moment. If you'd like to talk about your options, we're here. Schedule a free, no obligation, one-on-one with our team, and we'll help you build a plan that fits your situation and keeps your goals on track. You can reach us by phone at 608-345-6594 or you can always email me directly at jdholt@kw.com. And if you found this video helpful, click the link and subscribe buttons to get the latest market updates. Thanks for watching our video today, and until next time, be well.